Hello, traders and investors. Steve Gans here, and welcome to the first weekend update of 2025. So, let me get my pen out here and we'll start walking through what's transpired in the past couple of weeks, which are, of course, holiday weeks. But the thing I want you to note is going back just prior to Christmas week, when we were right in that area, I told you I expected we would probably chop maybe down to this prior support level here and then back and forth in this range. So, that's what I was expecting of the markets. It tends to be a time of lighter volume. You'll notice down here we're seeing that too. So just lots of the professional traders are out those 2 weeks. A lot of the activity that takes place in that period of time is on lighter volume. And more often than not, it tends to be retail traders that are home for the holidays, etc. And they're doing a little bit of looking at stock market and hopping in there, pushing the market around a little bit when there's not the big traders there that are either absorbing a lot of stuff people want to sell or selling stuff that a lot of people are wanting to buy. Again, the big money tends to move the market in a little more stable patterns, maybe sometimes than the retail traders do. But you can see that we came down to these levels. In fact, we broke below that level I was expecting, but later that day, we rallied up considerably and closed significantly higher. Again, that was about 2 weeks ago. Then we came down, we broke into that low area yet again this week, but then rallied back out of it. We're going to have a much better understanding of what we might expect from the market as we start getting into this next week and the big money starts coming back into the market. We're going to see volume that will certainly start to pick up a little bit as they start to get in and swing those heavier dollars around, so to speak. Right now, my expectation is probably a little more of the same, maybe some sideways chop here. The fact that we made these lows is of a little bit of concern to me, but the fact that we rallied above those prior couple days on Friday is a little bit of a plus. But again, this isn't the big money that was making those moves. I'd be a little more confident if the volume was higher when that happened. So right now we have what we call a little bit of a head and shoulders top forming. This is a shoulder here. This is a head. Then this is going to be another shoulder right here. And we didn't make a significantly lower low here, but if we do come back down and we make a lower low, that is going to confirm that head and shoulders for me. And it's going to make me think that we're in for either some sideways chop or possibly some bearish action. Some bearish action would likely take us down a little bit further into this zone and maybe even all the way down into this area. But again, right now, I'm not totally convinced of that bearish action yet, that we're going to see that. I'll know a lot more this week. Ideally, we would like to see a little bit of a break above this point, maybe hitting those old highs, a little bit of retracement, maybe into the middle of this zone, and then new highs. That would confirm for me that our overall bearish move, our overall bullish move that's been in place here for over a year would still be in place. That's what I would like to see happen to confirm a long-term bullish trend is still in place. Now, let's go take a look at a couple other symbols. Let's look at VIX here first, which is the volatility index. We can see that volatility here is staying pretty low. A week or two ago, it spiked up, but then it's back down here in these lows. So that's a plus for a bullish market. That seems to signal that there's not massive fear in the market right now. Not lots of people buying insurance. Let's take a look at RUT, the small cap index. So RUT also did what I expected it to do. You recall that I said that it will probably stay in this general range and probably even specifically come down to these lows here, bounce off, come back up into this range, back down. And so that's what it's been doing. It's just been chopping sideways in that general range as well. It is looking a little bit more bullish in nature. What I mean by that is each successive low has been a little bit higher. We haven't broken this high, though. What I'd really like to see is maybe another bar that would bring us up a little bit higher on that. That would help confirm for me on Russell that we are back in a form of an uptrend. Now let's look at the volatility on the Russell 2. That is the RVX. And we can see that volatility on the Russell is back down here at close to all-time lows again as well. So again, no real fear rearing up here at this point. Again, another indication of potentially bullish movements that are to come. So that kind of wraps it up for the overall market outlook for this weekend's update. Okay, now those of you that are part of the alert service, let's just take a look at current open positions. Now, if you're seeing this on YouTube and you're not part of the alert service and you have an interest in exploring it a little bit further, I'll put a link in the notes down below for you to go to and find out more about this. But this is basically a service where I share my options trades with a group of individuals, and along with each trade, with each opening, adjustment, or closing, I include a little video that explains the trade I'm putting on, how I'm putting it on, why I'm putting it on, and then of course I do the same with adjustments and ultimately the closing of the trade. So as we can see in this trade was just closed out this last week. It was a $300 gain, about a 14% gain. That trade was open for about 30 days. We had the trade opening. We had 2 adjustments to that trade, and then the trade closed. That was a trade that just closed out for a nice profit. That's usually what I shoot for, in that 10 to 20% range. So now let's look at the open positions. Open positions right now, we've got this trade in SPX, and one of the things you'll notice is a number of these trades are in SPX, which is my main trading vehicle. So this is a butterfly in SPX. Just waiting for this to decay a little bit more for our what's called our T0 line to mound up. This is the level of profitability in this trade. Right now it's relatively small, but I do hope and expect that this is going to mound up a little higher, bring more profitability into this trade. This is a trade in WM, Waste Management. Now this particular trade started life as a bullish trade. Then when my bullish thesis did not play out, I converted it into a bearish trade. And now that thesis is working well, up nicely in this trade, about 16% or about $400. I'll probably be looking to thin or close that trade later this coming week. This is another butterfly in SPX. This one is out in February 21st. It's up $180. Again, the thing I like about these butterflies, which is why they're my main trade, is this T0 line, which signifies our profitability in the trade, is relatively flat. So our market can go up or down a fairly significant amount. And this line just sits here, and as time decays, this works its way higher and higher. And that's the profitability coming into the trade. So I'm really playing more time here than I am a market direction. And again, that's why this is my favorite trade. I don't want to be glued to my screen worried, is the market going up? Is the market going down? If the market chops up or down 50, 60 points and buy the market on the S&P 500, that really doesn't make any difference to me because I'm largely just playing time decay here. And then we have the trade in SQ, which is a long call trade, a leap, and it's working very well. This doesn't expire. This option is out over 2 years is when it's going to expire. So this is more of a long-term investment that I did the fundamental analysis of and chose to buy some long calls in this. And again, those are working out nicely. And then this is another longer term trade. This one is in FTNT. And I've been in this one 215 days, but here I'm just selling puts. I'm doing what's called the wheel process, where I'm selling puts to have the stock put to me. The stock hasn't been put to me yet, so I'm up. By the time I roll this put again here shortly, I will be up about $3,000, and I have yet to take possession of any stock. So this is just simply rolling those puts out in time, collecting that premium, collecting that income when I roll those puts. And eventually this will get put to me, but when it does, my cost basis will be significantly lower. So right here, if this were to get put to me, this is at 92.5. I have sold 2 puts here. So when this turns to about $3,000, so that's going to be $3,000 in premium I've taken in divided by 2 puts. So that's going to be roughly 15. And if I get that put to me at $1.50, that means that my real cost basis in that is going to be 92.5 minus $15. So whatever that ends up coming out to be, basically I'm getting a $15 discount to buy that stock. And that's just because of the puts that I've sold all along the way. I've just lowered my cost basis for when it does eventually get put to me. So again, this next week, my game plan is going to be to potentially thin or close this position, maybe thin this one out if it gets to about 10% profit or so. If this moves up a little bit further, I may thin this one as well. And I'll probably look to potentially open another new butterfly trade. And or there may be an earnings trade or two I might look at as well. So we'll have to see how the week plays out. But that's where we're at going forward. Please, if you like this content, subscribe if you would. And then those of you that are interested in checking out the alert service in a little more detail, I try to keep it a really affordable way for people to learn options trading. So take a look at the link down below and see if that might fit your needs. Take care, everyone.